perspective on life. I'm Oceana Zhou, oil market specialist with S&P Global Commodity Insights. Here today, on the second day of APEC, we have Janet Kong, CEO of Hengli Petrochemical International. Janet has more than a decade of senior management experience in global energy and petrochemical markets. Janet, I know you have a very strong background of international, but please allow me to start with China because it's a focus during APEC this year, and it is the second economy in the world and also Asia's top consumer. And we know China's chemical industry is in a downturn cycle, suffering from fast-growing capacity. What do you think this kind of situation will be end, and why?
I think the downturn in petrochemical has been well publicized. Petrochemical industry has always been very cyclical, as you know. So this time the downturn is exacerbated by what happens in China, which I think due to both structural and cyclical factors. Structural factor, let's name a few. The property downturn in China, which can be a multi-year, potentially multi-decade adjustment process. Then the aging population, declining population, and what I think as a result of that, a potential changing saving investment balances in China, which China has been boasting a very strong savings rate, and as a result, large amount of capital available for further investment. And I believe that tipping point has come to tilt that balance into unfavorable time. So structurally speaking, Chinese economy is going through a downturn, and as a result of that, there is demand, especially demand for petrochemical and petroleum products. But cyclically speaking, since the rebound post the lockdown being reopened up in China in 2022, policy-wise has been lackluster in supporting aggregated demand recovery in China. So if you look at both factors, the downturn, the trajectory has shown no sign of changing in the moment.
Okay, so if we want to change this kind of situation, what do you think will be the key factor, and what will happen in the industry domestically before this kind of downward cycle ends?
Yes. Well, to improve the demand situation or the supply-demand balance for China, one could either look at addressing policies stimulating domestic demand, right? So that's really in the hands of the government.
Yeah.
And so far they have released a series of various policies, but with not a significant impact on really lifting the aggregate demand in a meaningful way. Park that. An alternative would be addressing supply situation.
Yep.
Using either sectoral policy or tax policy or combination or environmental policy.
Yep.
To curb the capacity addition in China, or replace using new capacity, new technology, replacing the old one, which has been a focus for the Chinese government. But that policy so far has shown some impact.
Yep.
We do notice some slowdown in capacity addition in China for this year, next year in refining, and maybe in PTA.
Yep.
But we need time to see the total impact.
Okay, so that means that we still have a long time to watch the outcome then. But it's quite important because China used to be a big petrochemical product importer, and now it become a big producer, and even there's a lot of surplus in a certain kind of products. So what is this mean to the international market, and how does it impact the market?
China has been the world manufacturer for decades, right?
Yep.
But that's more manufactured in consumer goods, electronic goods, etc., etc. Petrochemical, even about 7-8 years ago, China was still largely an importer, including goods such as PTA. But now PTA is very oversupplied in China, and China is turned into a net exporter for PTA. And I'm sure the trend will increasingly expand into other commodities or commodity-grade petrochemicals. What are the changes? One is, if you look at the overcapacity, that tends to concentrate on commodity-grade chemical. But there's still growing needs for specialty, finer grades. So differentiation is the key. The Chinese manufacturers, such as Hengli Petrochemical, are going further downstream in the petrochemical chain, and to differentiate ourselves, to focus more either environmentally friendly products such as PBAT, more specialty grades chemical for pricing, relative pricing power. And secondly is, I'm pretty sure the world needs to get used to a world where China will import less and less upstream chemical and export more chemical in its place. But the flip side of that pattern change is China will increasingly need to import more petrochemical feedstock, such as ethane, LPG, and crude oil in all the combination. So while China becoming more self-sufficient in making petrochemical intermediate products or finished products, China will be a lot more reliant on the upstream feedstock for petrochemical.
I see. And besides China, actually, during APEC this year, we also talk about like the crude price, crude supply, like the OPEC plus, and also talk about like the geopolitics issue, like the war between Russia and Ukraine, and like a U.S. Election and the potential of recession. So from your point of view, which are the top ones that we need to pay more attention on, which have a more impact to the market?
If you talk about oil market trading, of course, everyone watches OPEC plus action very, very closely, almost with a microscope. And recently, they announced a decision to roll back the expected production increase. One of the main reasons is the oil market has been trading anticipating a slowdown in Western economy on top of a slowdown in China economy. And that gives a bearish atmosphere to the oil market. A lot of the big banks have recently revised their outlook on oil price, universally turning more bearish looking forward. Regarding forward-looking outlook on the market, what's well known is there. I think OPEC decision, while being rolled back, is almost another shoe waiting to drop. People understand they have been restraining production, restraining export for the last 2 years to support the market. How much longer can they continue that when non-OPEC production has been taken advantage of the strong demand and has been growing very consistently? And so that's understood. So OPEC policy will be always very, very important. That's a more short-term impact. But looking more with a medium-term horizon, the war in the Middle East has had little impact actually on prices or on supply. And the market is quite complacent because market, I think, implicitly understand OPEC producers have a lot of spare capacity. But should there be any escalation in the situation in the Middle East, and changing that comfortable level or the belief no supply disruption is the baseline, and that could be another factor the market is underprepared for. And the third thing I personally worry a lot is the U.S. China relationship. They're definitely not in a honeymoon period for sure, but depending on who the president of the United States next one will be, that situation can become even more interesting. And if you remember 2018, the trade war version number 1, and now we're going to potentially a number 2 post-election.
I see. Okay. Thanks a lot, Jeanette. Thanks for joining us today.